Guys, if you really want an explanation on why the market behaved this way, here it goes, okay? So the Nasdaq in general has a lot of puts that acts like a security by the end of last Friday, and people were worried that there might be a sudden VIX change over the weekend, or well, most likely just people didn't take account of, or people take account of the trading volumes will go down. The real trading volumes are going to go down because it's Chinese New Year and there are a lot of other New Year events in Asia. Therefore, it probably accounted for like 30% of all trading volume. In terms of active shorting on the oil side, you have active longing on the lithium side, and you have a lot of Asian people actually trade the Nasdaq options and trade Nasdaq securities or trade Nasdaq futures. And you guys know that even though Singapore right now is still the financial center or the new rising financial center of the entire world because of the political situation in China, but there's still a lot of leftover positions back in Hong Kong, and all of those got stopped out because the market actually doesn't open there. And due to that, a lot of people are either going home or doing their stuff. It almost acts like a holiday. So most likely, because all the short sides are exhausted and the long side are still staying in the game, therefore some of these longer expiration call options becomes more not really lucrative because no one is really trading them to hedge over the last week. And we all know that most likely we already know the pinpoint down is 13,000, right? And we know that pinpoint up is about 14,754. So then we already know the range. So a lot of people will just, play some straddle, condor, butterfly, or whatever you do with options. Others we plan to do a medium-term shorting. We're just bleeding on our contracts. And most of the other people will just come in early in the market and buy back some shares and see what's going on. But for the most part, there aren't that much very, very huge out of the money option coming in, and there are some executives and insiders that are buying in their shares. But again, a lot of people are asking me those questions like, if insiders buy, why don't I buy it at the same time? Because a lot of times when insider buy, they buy for different reasons than why you're buying it. Their average holding time is longer, and they also sort of serve as a disaster relief interest rate hedging play when they invest in their own company, because they know that they sort of can control the outcome in a little bit, but not really. At the same time, they're not really worried about getting squeezed out of their position. Considered their net option, technically they're net option sellers, even though they're buying and exercising their options because they own their company and the company actually issues on stocks. Therefore, they actually have direct control over dilution. Therefore, in terms of this entire financial game, no matter what they do as an insider, as long as they have a portion of their securities are exercised or their base price is lower than market price, they always can make money, right?